The US economy is teetering on the edge. It is hanging by a very small thread that could snap at any second. And while this banking crisis is probably not the first domino to fall, it's certainly the most visible. Now, over the past 2 weeks, I've gotten so many questions from viewers on this channel and my own clients who are in the middle of buying or selling homes. And there's a lot of worry right now and anxiety over what we're staring down the barrel of here in the Kansas City real estate market. So if you're buying or selling a home here in Kansas City this year, we're going to break down exactly what's happening right now, how it impacts the housing market, and some things to look out for if that is something you plan to do over the next year. Now, if you didn't see my video last week and you'd like more context surrounding this, I'll link it right here, but we left off with a huge fork in the road over the past year. You know it as well as I do. Inflation has been sky high. It has been very difficult to tamp down, and as a result, the Federal Reserve has been increasing interest rates, trying to slow the growth of the economy down. And one of those sectors is the housing market. It's contributing a lot to inflation. So they have committed to a hardline approach of increasing interest rates every single month until we hit that level where inflation can finally fall. But the problem was that the banks started collapsing. It caused a huge crisis, and now a lot of people are left questioning their confidence in the banks. So the federal government decided to bail them out, essentially wrote a blank check to all of these banks so they wouldn't collapse and it wouldn't cause any widespread panic, and that situation is still going on. But here was the fork in the road. This Wednesday, the Federal Reserve had a critical meeting that could decide the fate of whether this banking crisis turns into a full-blown recession or whether we stave it off and we're headed for a soft landing. So the two decisions. One was to lay off, hit the brakes, stop increasing interest rates so the banks can regain confidence and we can get back to normal. Decision number two was continue increasing interest rates because inflation was our goal and we're going to stick to the plan moving forward. The ballots are in. The Federal Reserve has decided to go with a 25 basis point increase, which was pretty standard for what they had planned anyway. But this signaled a very hard-line approach to inflation throughout the rest of the year. In fact, what we're staring down the barrel of as of right now, after they've made that decision, is that they're going to increase interest rates 2 more times throughout the remainder of the year, keep them high, and at some point by 2024 or maybe even December of 2023, we should see interest rates start to fall. Now, I know that's all of the boring stuff that we could probably just skip past, but I think knowing the context is very important, especially with a huge transaction like buying or selling a home on the line. Now, we will get to how this impacts mortgage rates here in just a second, because after all, that's going to have the biggest impact on you here in Kansas City. In terms of what this means for the economy, there are two sides, two very extreme positions that economists are taking. One side of the aisle says that this is going to be the worst banking crisis, the worst financial crisis we've seen this century. And of course, a lot of the folks in this choir have been sounding the alarm bells since the recession started and a bunch of money was pumped into the economy. And the other side of the aisle is saying, you know what, we've been preparing for this since 2008. They've been stress tested. We have measures in place. And what we're looking at is most likely a soft rather than a hard landing. So this article from Bloomberg sheds some light and says that bailing out the banks is not without costs, but it also doesn't mean that we should expect a spectacular financial crisis right now. In fact, the rational expectation is that the US will muddle through its problems and patch up the present at the expense of the future. In other words, one of the things that we're really good at, we're going to kick the can down the road. They say that the big problem is the risk of stagflation, as you probably expected, and they conclude that history shows not all financial sector problems have to be explosive. Now, if you're concerned about what exactly is going to happen over the course of the next year with the economy and the real estate market in Kansas City, then one thing that you could do to stay on top of all of it is subscribe to this channel so you see these weekly updates that I do, breaking down the nuances of what's happening here and there so you can use these to your advantage when it comes to making a huge decision like buying or selling a home. Now, as promised, mortgage rates. Here's what they look like as of Thursday when I I filmed this, you can see that the 30-year mortgage is looking at about 6.475%, which is down from last week by about 0.1%, which is not huge. And you can see all of the other loan options are hovering in the low sixes aside from jumbo loans. Now, how this compares to the last several months, here's a graph that'll show you exactly that. They hit their peak right before the end of 2022, so in November, and you can see that they've kind of declined in February and then shot back up in the middle of February, and now they're finally starting to trend downwards. So what do economists expect? Well, here's an article that discusses what this means for mortgage rates. And they're predicting that the highest mortgage rates of this housing cycle are likely in the past. They've added that mortgage rates will trend lower from current levels later in 2023. Now, this is really good news. Whether you're buying or selling a home, this is exactly what we've wanted, especially since mortgage rates hit those peaks in November of last year, right? It caused a huge panic that home prices in Kansas City were going to just fall out, that it was getting more and more expensive to buy homes. So this is some relieving news to hear that they're going to slowly start to decrease throughout the rest of the year. But that's not set in stone. Anything could happen, and there are a lot of variables that are still in the air. Now, if you are buying or selling a home in Kansas City this year and you'd like to have a conversation about what this means for you, how it'll impact you, if now is the right time to do it, I would love to talk with you. All of my contact info is in the description. Give me a call, text, or email, whatever is best for you. I'll get right back to you and we'll have that discussion so you know what to expect this year. Now, here are 5 trends that are happening in the real estate market right now as a result of all of this and that have been developing over the last several months. First is that many people have questioned their confidence in the banks. Many of these companies that went to get their money back, that had to be bailed out by the government, had hundreds of millions of dollars that was not insured by the FDIC. And that's why the government stepped in, basically wrote a blank check insurance policy to all of these banks. Now, what this means is there's going to be an incentive with inflation really high. The government's printing money again, and their balance sheets are starting to shoot back up again as well. A lot of people are going to store their money in hard assets, just like they have over the last several years. And this is part of the reason that real estate became so popular, because one of the best ways to shelter your money is in an asset like real estate. But you have to make sure you're making the right decision and buying a property that isn't going to tank the day after you buy it. Now, ironically, my second point is that this is one of the best times in the last 5 years to actually save up for a down payment to purchase a home. In fact, over the past few months, you've probably gotten them too. One of my bank accounts with Ally Bank, I've been getting emails from them every single month that they're increasing the interest rate. In other words, how much money they're paying me to park my money in their bank. And here's an example of one that I saw recently. You can see the subject line says, "We're running out of ways to say that your rate is going up." But if you're a first-time home buyer or you're looking to upsize and move up into a bigger home and that down payment is something you're worried about, now's a good time to save up for it. Number 3 is that the market is really hot right now. I have several buyers that are looking right now all across the Kansas City area, and some of these homes that we've been looking at are going pending like you could not believe. You could bat an eye and they're under contract, and it is like a revolving door right now. We've got a lot of properties hitting the market, a lot of properties going under contract, and Forbes.com says this is all despite the fact that it's more than twice as expensive to take out a mortgage today than it was in the beginning of 2022. Now, this is also creating pressure for current homeowners who did get mortgages at those historically low mortgage rates of around 3%. In fact, Fortune.com came out with an article that said many homeowners are feeling trapped by those and forced to become landlords because they don't want to give up that historically low rate when inflation is still double that amount. They're practically making their own money. Now, 5, this is a classic one and it's never going to go away, is the refinance strategy. A lot of people can afford these monthly payments. They're just a little higher than they prefer. They can still afford them, and they're going to proceed and buy homes regardless because they have an absolute need to buy a home. And even though mortgage rates are still high, they know that later on down the road, they can eventually refinance once rates do drop, maybe in 2024 or possibly in 2025. Now, this does make sense, but there's one word of caution that I have for you, which is you've got to plan to be in this home for beyond 5 years. Ideally, at like a 10-year, maybe the forever home concept. This is where you plan to set up your roots for quite a while so that you're not losing money when you do go to refinance. Now, let's zoom back out and assess the state of the broader economy. Because quite frankly, this does not look like 2008 to me. This does not look like the housing market is fundamentally flawed and it's going to bring down the rest of the economy. In fact, it looks like the reverse is true, where the economy faces a bigger impact to you and I and the real estate market than anything else, with a lot of question marks up in the air about what we're actually looking at and what a recession would bring to the Kansas City housing market. I filmed this entire video right here that breaks it down. It'll tell you the trends over the next 5 to 10 years. And also, if you'd like to have a conversation about this and you're concerned about it, if you're buying or selling in Kansas City this year, I'd love to help out. All of my contact info is below. Call, text, or email. We'll sit down and make sure that this is the best decision for you or what your alternatives look like. Subscribe if you enjoyed this video, like if you learned something so that other people see it, and I will see you on the next one.